So Murli, it's been a bit of an anti-climax from what the exit polls were indicating yesterday to what reality is turning out to be. Like, it looks a little bit like the landslide victory is not happening for the Prime Minister.
Absolutely. So the euphoria is gone, number one. And the screen is giving us a completely different picture. The markets are just, what to say, dancing to the tunes of what the reality is emerging. Now, what's the reality? Very clearly, BJP's chances to form government and the Prime Minister's third term depends on NDA. Now, when I say it depends on NDA, it means that they will have to depend on the Telugu Desam party, which is sweeping, which is a partner in NDA, and the JDU, which has got about 10. So, as I can look at it, Chandrababu Naidu and Nitish Kumar will call the shots.
Wow, the markets clearly won't like this. Remember, Mr. Market knows it all. So from the get-go this morning, while the exit polls could have got it completely wrong yesterday, the Nifty opened with a massive gap down in today's trade, and it's failing to see any sort of meaningful recovery at this stage. Of course, if the Prime Minister and the NDA doesn't come in with a sweeping majority, policy continuity and the kind of ease that they've managed to put policy changes with may not be a reality anymore. But again, this is, of course, if you're a trader, you are concerned. If you are a bear, you're in the money. If you're a bull, you're probably not very pleased. If you're an FII, you are the one laughing your way to the bank, because remember, they were net short this market, while most of our local investors, reporters, advisors, everyone was talking about FIs were probably going to be disappointed. But guess what? They are not disappointed. And I think one other class of investors who shouldn't be disappointed are investors.
Absolutely.
If you are a long-term investor, this is an event. What you're supposed to be doing, and this is the advice that goes out very regularly, is the importance of risk management and asset allocation. You should be allocating to the equity markets irrespective of what happens on a more macro level. Remember, as an investor, you cannot control the bottom, nor can you call it the top. In that case, what you do is you stagger buy those investments, and Murli's done that for decades together, and that's
absolutely.
the only way to do it, right?
So over the last 1 week, the narrative has been very clear for investors. If you are a long-term investor, you will not lose money. Traders may or may not lose money. So today's concern is for the traders. Next few days it will be. Once the new government is formed, I don't know how it will be formed, but this is an excellent opportunity for long-term investors. You should simply keep buying on every fall. Every dip is a buying opportunity. Go out, buy, create wealth over the long term, because the economic fundamentals are very strong. Don't worry about politics. That's for the traders to play.
No, and I think a disclaimer there, you should be talking to your advisor, and whatever you execute today should be dependent on your asset allocation. So if you're a senior citizen where the bias is on debt, just because you're seeing a 2% correction in equities doesn't mean you go out and buy it. Also, what you want to keep in mind on a lighter note is market volatility makes a short-term trader a long-term investor. So if you're a trader and seem to be stuck, you might be in for a surprise and turn out to be a long-term investor.
And one more point is, if you are a mutual fund investor, simply do daily SIP over the next 3 weeks or next 1 month. You will get an excellent average.
Yeah, so good luck with that, and until then we'll keep counting and of course come back to you with more on how the pitch is turning out to be.